In the past 9 months, we have finally seen a stop to the never-ending cycle of rising secondary market prices of the most hyped watches on the market, with them collectively dropping roughly 27% since their peak performance in March and April of 2022. So at the start of 2023, what I wanted to do is revisit and recap to just give us a view of the current watch market. What we're gonna be looking at in this video is first a quick recap of the last few years. Secondly, the brands and models that have decreased the most in value. 3 is what surprisingly has sustained or increased, and then close with some final takeaways. First, let's recap what has happened over the last couple of years by highlighting the market peak, which took place again in March of 2022. Now, the tool I'm going to be using here is one called Watch Charts. Absolutely phenomenal resource for anybody that's interested in this type of thing. This isn't sponsored, but I will link to it in the description down below if you are interested in doing some of this research yourself. Also, as we get into this, I do want to stress, buy what you love. I've been a huge proponent of this for a long time. I've been an adversary against the concept of watches as investments. I like buying watches because I like to wear them. It's a part of my individual expression. That's what I'm for more than anything else. I just wanted to do this video because I thought it'd be interesting and it gives us a sense of consumer behavior. So how Watch Charts calculates the health of the market is by creating a watch market index by taking the transaction value, crucial to understand that, of the top 60 watches from brands such as Rolex, Patek, AP, Vacheron, Omega, etc. And this does not include Richard Mille or FP Journe given the more limited sales data. That is an important distinction here. And it's going to then give us a specific idea of the market in a snapshot of time. In March of 2022, the watch market index reached 54,405, indicating over 100% growth in less than 2 years when comparing it to March of 2020, where it peaked at 26,298, with it now at the end of 2022, currently sitting at 39,340, a roughly 27% drop since its peak earlier in the year. Now, leading the charge in creating this drop were the same watches that were responsible for the jump in the past couple of years. The Patek 5980R has seen the largest percentage drop of transaction value since March, dropping 38% in value from a number that peaked at $342,000 in April to a transaction price of $210,000 as we're entering 2023. Another notable drop is the Rolex Daytona 116-500 LN, which has seen a 17.8% drop in the last 6 months, but closer to 36% drop when looking at peak numbers in March, with it now selling at $29,636 for an average transaction value. The AP Royal Oak chronograph, the 2633-1ST, has had a similar fate, down 23.9% in the last 6 months, or minus 36% since its peak, while the Vacheron Overseas Gen 3, who benefited greatly from the demand of the Nautilus and the AP Royal Oak, has also seen a nosedive in value, most notably with the Blue Dial variant, minus 21% in 6 months or 38% in 9 months, with the Black Dial version experiencing less of a percentage downturn, but it is now trading around $5,000 over retail, a vast difference from less than a year ago when it was approaching nearly double its retail price. Now, here are the top 5 major brands that have seen the biggest drop in transaction value over the past 6 months. Please note that the date of this actually happening, this is changing all the time. You had Patek Philippe down 15.9%, AP down 14.2%, Rolex down 12.9%, Vacheron down 9.6%, and Tudor down 6.5%. In general, the top of the market hype watches have been the pieces that have seen the biggest change. Yet it is still important to note that all of these watches still are trading above retail, and in a 3-year window, they are still significantly up. So there probably is more room for these to come down if I had to predict something. This is not financial advice, not trying to say that, specifically from brands like Patek, AP, and Rolex, if I again had to guess. What has been interesting though is how much of the market is more neutral. Brands like Cartier, Omega, TAG, IWC all have less than a 5% change in transaction value over the last 6 months, with the majority of that change being a result of a few outliers from the brands, like for Omega, the Snoopy editions, rather than the core collection. Further, brands like Zenith, Chopard, Hublot, JLC, Breguet, Glasuta Original, all have seen less than a 2.5% drop in transaction value over the last 6 months, so more or less relatively unchanged. And actually, there are a select group of luxury brands that saw an increase in transaction value over the past 6 months. The smallest jumps being from Breitling, who saw a 1% jump, and Blancpain seeing a 0.6% jump. Neither sizable, but still a surprise. In addition to this, there's also been some brands that had a more sizable uptick in transaction value in the past 6 months. Bulgari has seen a 3.8% increase in 6 months, a 6.7% jump over 12 months. A Longa and Zona has achieved a 4.4% increase in transaction value in the past 6 months, with a 13.1% jump in the previous 12 months. And perhaps the biggest surprise, Girard-Perregaux with a rise of 5.7% in transaction value in 6 months and a whopping 30.6% increase in a 12-month period as a result of the rising interest in the Laureato collection and perhaps more consumer confidence after their separation from Kering. Examining quickly more affordable brands, there's also only one brand from my research that has dropped more than 5% in transaction value in the past 6 months, and that is Swatch, minus 9%. Clearly a result of the Moon Swatch hype from earlier in the year. Apart from that outlier, every other brand in the affordable realm has seen less than a 5% change in transaction value over the previous 6 months, with some even trending up as a result of probably some price increases at retail. Don't get too excited and think you're gonna be cashing out big for your Bambino. So from all this research, what are the key takeaways? In my opinion, number one, the products that have been unaffected by hype have remained pretty much unaffected for the most part. Number two, as the old saying goes, the bigger they are, the harder they fall, as the hype pieces of the last few years are seeing that downturn after years of candidly absurd increases in trading values. And then number three, I do think there is something to be said about staying to the path of what works for your brand. A brand like Longa, who hasn't deviated and done too much to shift into trends rather than just sticking to what they do best. I think people recognize when a brand can do this and when something might be slept on and provide some incredible value, while others are maybe neglecting their consumer base. But all right guys, that's all I have for this video. If you found this interesting, let me know in the comments down below. I know the whole concept of watches and investments is not something that I get behind, but when you're talking about the health of the market, what's going on, I think this allows the smoke and mirrors to be put away to the wayside, where you can actually look at what is truly going on here with the market. And when we hear about this doom and gloom scenario, it seems like from my perspective, the things that are really being affected the most are the watches at the crazy hyped end of the spectrum. For the most part, the rest of the market, you know, it's not necessarily a big change if you look across the board. But love to see comments down below. If you want us to do this more often in the future, can absolutely do so. I kind of like the concept of going into every new year. Not every year is probably going to warrant this, just given how much has changed. So if you guys like these style of videos, we can absolutely do more of them in the future. Any thumbs up would be a great indication that you want to see it. Also, definitely check out teddybaldassarre.com, full authorized dealer of 30 brands, quick and fast fulfillment, dedicated customer support, and a full factory warranty for all the products that we offer. And again, the #1 way to support the content. We don't take money from the brands, we produce content on this channel, so any purchases from our site is how we're able to fund these productions. But guys, thank you again so much for watching. Be well, and I will see you all very soon.